that some of the IT names are showing, and today is no exception, because suddenly you have a Happiest Minds which has come to the fore and is up about 10%. So that is our stock of the day. And let's get in Jasmeet to talk about what is it that could be working for Happiest Minds. Jasmeet, good afternoon. What's happening with Happiest Minds?
Well, very good afternoon. The Happiest Mind is up 10% in trade today. So let's understand why is this happening. But as of 2025, it has been a transformational year for the company. The company has leveraged and grown more towards the inorganic growth sectors, which would be BFSI and healthcare. And company continues to focus on Gen AI with a separate Gen AI unit. While company has had few acquisitions, that would be where company spent $90 million on firms like Pure Software, Auros, and Middle East Tech. While company is also benefiting from cross-selling of its services to its acquired entities, company is also looking to acquire furthermore clients in cybersecurity with a size band of $5 to $15 million. Understanding the future outlook of this particular share, company expects a double-digit organic growth in the coming time, while it's also looking to expand geographically. While there are also key risks which an investor look for. Firstly would be the slowdown in the US, which remains on constant focus. And secondly, the education tech has seen a slight slowdown, which can hinder and impact the revenue in the coming time.
Thank you so much for that, Jasmeet. We'll let you go. But Neeraj, when I'm looking at Happiest Minds and I'm looking at what the average analyst is baking in terms of upside, just two analysts have a buy call or an accumulate call above 700 rupees a piece. The stock currently sitting at 665. So therefore, upsides it seems is capped, while Anand Rathi is very positive, and that note today has sent the stock zooming. It's 10% higher today. But the average return potential on this one is -1% now for the next 12 months.
Wow.
Yes, I'm just trying to also see, of course, trading volumes are the other piece which is pushing the stock higher. It's trading, the trading volume is at 5 times today, and more than 60 times the 20-day average. That's what's really pushing the stock higher. The RSI is above 70. Want to quickly take a view with Kush, in fact. Kush, what's the sense like on a Happiest Minds?
Book profits, or at least start to book profits.
Okay.
Not just because of the big move that you're seeing. There's a supply zone coming up from 670 to about 695, 700. Since you mentioned that number, but there's a supply zone coming in, around that level. Now, if anyone's been holding on for a while, they're perhaps seeing their costs now. If you're holding from lower levels, you're finally seeing some gains. So not a bad idea to start booking profits and take some money home. Not, as I said, I rarely get disturbed by these big moves on a single day unless there's a technical factor to it. Right now there is, and as I said, that's the supply zone. 670 to 695, the stock could see supply pressures. If, however, in this momentum, the stock is able to take out the 695 level, 700, to round it off, then you would see further upsides. But given the kind of setup that there is, we are in right now, I would suggest book profits partially, hold the rest of the quantity.
Okay, Mr. Chokalingam, any view with regard to Happiest Minds in particular first?
It's a good opportunity to sell in phases because it's a more of tactical these days. It's a clear sell even at current price, because year-on-year profit growth is not at all supporting, the kind of PE it is enjoying now. I would give a sell call on the stock.
Appropriate price to earnings for this one, sir. Give us perspective.
See, if profit is able to grow 20%, for a momentum stock like this, I would maybe happy to give a 40 PE. But if you look at the consolidated profit growth for FY25, profit is almost stagnating. The growth is not at all there. And why should one pay 45 to 50 PE for this kind of profit growth? And if you see for last 2-3 years also, it has been struggling. There is a big mismatch between the PE multiple and year-on-year profit growth. So I would sell, and I believe for this kind of valuation, it is very difficult to expect the company to benefit from any consolidation or merger acquisition which can happen in the industry. I'm not talking about Happiest, But I do believe in further consolidation and merger and acquisition in the entire small and mid-sized IT space, because large companies are finding it very difficult to grow, even at 4-5% their revenue in dollar term.
Point taken. So I want to